I would just like to start with you, Simon, because I've actually done a couple of panels recently around sustainable finance. It makes it seem like it's perhaps a sort of zeitgeist, but actually this has been going on for quite a while. And most recently, BlackRock CEO Larry Fink sent a letter around to CEOs, and one key quote that came out of that is that he said, society is demanding that companies, both public and private, serve a social purpose. Now, I was going to ask you, are shareholders demanding the same? But actually, I think a better question would be, how are they demanding that? Because I recently moderated a panel with Dan Iverson of PIMCO, Rick Reeder of BlackRock. They were both saying, yes, there is more demand from this. I also spoke to Simon Smiles of UBS, ultra-high net worth, and he said what their investors, ultra-high net worth, are now asking for is 100% sustainable portfolios, which means they want sustainability to be in the DNA. Is that what you're seeing as well?
I think the most important point of the quote from Larry Fink was society. So it's driven by society. So I think people are fed up in an environment where if you look at financial services companies have broadly outsourced their conscience to the regulator. If you take the energy market, you have an industry where the government is having to intervene and have a price cap because of the predatory pricing policies of the existing suppliers. And I think what we've seen in the corporate world is this shift in power from this world where the corporate thought they were in charge and they were the adult treating the customer as the child, and now in this new world of transparency, all the power has shifted to the end consumer, to the individuals, and they're now holding these companies to account. They've ripped down the walls that companies used to put around themselves, and I think that is true from employees, it's true as a customer of an organisation, and I think that's what's coming through investors as well. They see that the genuinely purpose-driven organisations will be the ones that build very successful businesses over the next 10 years.
Right, the power of the consumer. That's really interesting. And I want to bring you in there, Stephen, and ask you about small and mid-sized companies. In terms of the sort of thought around ESG, are they sort of following the large corporations, or are they actually more at the forefront of this move towards ESG, environmental, social and governance thought in investing and in growing businesses?
I think they're right at the forefront, but they probably don't use the same labels. You speak to any entrepreneur, the one thing that really jumps out is the passion they have for setting up their business. If you go back 20 or 30 years, you became an entrepreneur because you couldn't get a proper job. Now it is the job of choice for all very smart young people, and that is fantastic. And I think it's much easier to relate the sense of purpose to somebody who has actually chosen to set up a business to do something. Sometimes that may not be what you would think of as a social purpose, but it affects people because it employs people. It has an impact on societies. And if I go back to our own business, when we set up in 2011, I suppose you're at the sort of beginning of this change, and we were very fortunate to be able to set up a business from scratch with a purpose at its heart. And the purpose for BGF is to connect with thousands of small companies and entrepreneurs right across the country and to be relevant. And if you look at some of the sort of background to this, the perception around the city, whether that's banks, investors, hedge funds, private equity firms, venture capitalists, they are all tarred with the same brush, which is it's not relevant to us. It's all about making money. It has very little impact on real business and real communities. And I think we have changed the dialogue and the narrative, and events like this and the continuing focus, and Larry Fink's letter is, I suppose, the latest of that, really highlight that to have sustainable profits, you've got to have a business that will be here for longer than 5 years. And it goes, again, to entrepreneurs. The most difficult thing when you set up a business is that you have an idea. You have to find somebody else. So the one person becomes two. You have to be able to attract and retain talent. And I think purpose is a really core part of that. So the next generation, whether they're millennials or snowflakes, and those are sort of very sort of wide labels, I think do focus more on what are you doing? Is it making a difference? I think that is entirely consistent with making profits. And one of our shareholders are all the major British banks. One comment that was made to me by the chief executive of one of those banks, it's taken us hundreds of years to build up our reputation, and we've lost that in a very short space of time because people have lost trust in the financial system. So I think we ignore this at our peril.
And we also ignore, according to many people, climate change at our peril, Michael. And this is sort of the area that you're more focused on. Tell us a little bit about that.
Yes, I represent one of the members of the FSB, the Financial Stability Board's Task Force on Climate-Related Financial Disclosure, which is a bit of a mouthful, so let's call it TCFD for short. And TCFD was set up a couple of years ago S&P Global is one of the task force members, along with another 30 business organizations. And the main purpose of the TCFD, which was set up by Mark Carney, chairman of the FSB and obviously governor of the Bank of England, was to counteract what Mark Carney calls the tragedy of horizons. And this is really about investment and financial community not taking into account the longer-term risks related to climate change into their short-term investment decisions. So the TCFD was set up to provide clear, consistent, voluntary recommendations on what sorts of disclosures companies should be making to allow investors, lenders, underwriters, and credit rating agencies such as us make informed decisions around where climate risk and opportunity actually exists. And why is this important? Well, because we know the scientific evidence suggests that there is going to be already is a massive impact from climatic events, storms, hurricanes, floods, droughts. And we also know that we're transitioning towards a low carbon economy, and that was really set in train back in 2015 after the Paris Agreement was agreed by 197 countries. So we're now on that journey towards the low carbon transition, and that has a massive impact on business. It means that they can no longer operate the way they have been operating in terms of drilling for fossil fuels, monetizing that in the same way as they were before. And that has investment implications which need to be taken into account from a point of view of financial stability and avoiding systemic risk.
And Michael, I know a lot of companies signed up in terms of supporting TCFD, but have you seen evidence of actions following those words?
Yeah, the amount of support for the TCFD, which was only launched, well, the recommendations were only released last June, has been tremendous. We've seen over 250 major companies globally support the recommendations, and that represents over $6.4 trillion worth of market capitalization. And within those is 150 financial institutions, banks, asset managers, pension funds, representing over 80 trillion of assets under management. So the amount of support for the recommendations is absolutely tremendous. But what's more important is the adoption and implementation of the recommendations. Mm-hmm. They are voluntary, but the concept is that over time, and there's a 5-year time frame, that they will be adopted by various jurisdictions, governments, and regulatory bodies so that they will be made into force. And that's happening hopefully very soon in the UK, following the work of the UK Green Finance Task Force.
Simon, when people think about sustainable investing, the first element that usually comes to mind is the environmental side. But of course, it's also about the social impact and it's about corporate governance as well. As an investor yourself, and when you talk to investors, are they sort of as keen that the S and the G aspect of ESG are part of their investment portfolios now?
Increasingly so, absolutely. And I think, just to pick up on one of the points, I think we're at the start of this. I mean, some of the work that Bloomberg did said that over the net between now and 2040, there's going to need to be $7 trillion invested into solar and wind across the world. I mean, that's just put in perspective, that's the entire market cap of the London Stock Exchange today. But I think companies understand, investors understand, you have to get all elements right. It's back to the customer point. The customer is going to hold you to account if you don't behave the right way, if you don't think about your contribution to society and the impact you're having, then you won't be successful. And I think, to pick up on Stephen's point as well, I think we're now in a world where trust is largely eroded. So, I mean, with this crisis of trust going on in the world, I think trust will be the centre of the biggest dogfight capitalism has seen for over the next 10 years. And that's driven you. And the fundamental things that sit behind trust is, are individuals or are companies, are they expert at what they do? Most companies are. Are they honest? Not many of them are honest. You might be a bit touch and go. And the third one is, are you good-hearted? And that, I think, is where companies are really struggling, because they look at their bottom line, they spend their time thinking about themselves rather than thinking about the broader society, the people working for, the people they're interacting with. And now technology, social media has passed all this control down to the end customer. And if you don't behave the right way, they will hold you to account. So when companies are thinking about out-competing, out-smarting, out-foxing, out-everything, they should be thinking about out-behaving. So behaviour will be the one thing that drives businesses to success over the next 10 years. It will always be about how you make your customers feel. And I think companies are increasingly forgetting that.
Maybe not so much small and mid-sized companies, Stephen. Is it easier for them to gain the trust of their consumers, or are they held to account more because they've got that sort of more direct interface than a huge corporation?
I actually think they're probably far more adept at speaking to their consumers because there's a closer connection. I mean, the challenge with very large corporations is they have structures. I mean, one of our portfolio companies, these three chaps founded, and one came from Unilever, and they got a customer complaint about something that they did. So he responded within an hour. He read it, thought about it, and responded. And he was in a FTSE sort of 10 company before. He said, in that company, it would have had to have gone through compliance, marketing, legal, are we going to get sued? So a month later, you get a standard letter. Now, that isn't customer engagement. That is the sort of thing that irritates people intensely. And Simon is absolutely right. They then take to social media. So I think we have to embrace speed and transparency. I also think honesty. I mean, if you think as an investor, one of the common complaints, whether it be for a bank or an investor, is it takes too long to give an answer. And an entrepreneur, every entrepreneur we've met has got the best business in the world. They're the most highly valued business in the world, so we start from that premise. And we don't always agree. What you need to do is to say, well, we don't have the same view on you, or we can't particularly help you and do it quickly. And that's where things like crowdfunding do make a difference. One of the appeals of crowdfunding is quick decisions. And it's okay to say you disagree with somebody, but tell them why. We will have investments that fail. What do you learn from those failures rather than trying to bury them? And I think that is part of restoring trust, much greater openness and honesty, recognizing the world is a complex place and not every business is going to succeed. And I think small companies are much, much more geared to that because the chains of command are much lower. You go right to the top of a company and they can make quick decisions. And they do, to Simon's point, it's all about customers. And customers comes in lots of different shapes and sizes, but ultimately you know what they mean. Who are you actually there to serve, and what do they think about what you're doing?
Mm-hmm. Michael, I want to ask you another energy-specific question in terms of the shale industry, for example. So that's something that's really picked up in the past 10 years in the US and largely driven by what's been happening with the oil price and sort of the US wanting to take back dominance of the energy market. I mean, what's the future of companies like that in a world where ESG has become so important?
Well, I think the transition towards the low-carbon economy is having a fundamental transitioning impact on the energy sector. We're moving away from any type of fossil fuel usage, including shale for that. I mean, the shale phenomenon is more to do with economics. The low-carbon, renewable, clean energy revolution that we're working through now is more to do with sustainability as well as economics. Both are involved. And if you look at the role of the private sector in terms of the growth of renewable energy, it's absolutely massive. 90% of all renewables are actually privately funded. The business world has a massive role to play in the energy transition. Shale and gas, those are all transition fuels. They're basically there to bridge us from where we are now, which is an over-reliance on fossil fuel and dependency on fossil fuel for our major sources of energy, towards a more low-carbon, sustainable future, which is based on clean, sustainable energy, whether it's renewables or other forms of energy. We need to find out because we don't know what's going to happen in the future. Business is constantly innovating, and there are new companies starting, and there's a whole green finance revolution taking place as well to actually allocate capital towards the energy transition. And that capital will be incentivized by policy, but also by consumer and social responsibility. So people who put their money into responsible investment funds don't want to see that money going to shale or to other fossil fuel companies. They want to be involved in that transition to the low-carbon, sustainable future through their energy investments.
Mm-hmm. Do you see, Simon, the same sort of interest from institutional and retail investors, or are retail investors more focused on the ESG companies?
I think it'll be led by institutions, actually. It can be led by institutions. So I think absolutely end investors and consumers are going to hold companies to account in terms of their behaviour. I think institutions are recognising there's a new world, and actually the new world, the businesses, people wake up in a few years' time. I think they'll care as much about the impact that their money is having, their capital is having, as the financial return it generates. And so these conversations are not ones that happen around the edge of the table now. They're front and centre in conversations you have with institutional investors.
And at Octopus, I know you do have a focus on renewables, but is there any other area in the sustainability ESG space that you're really interested in investing in next? So
we do renewables, we do smaller companies, we also do healthcare infrastructure. So if you look in the UK's healthcare infrastructure is not fit for purpose. If you're unfortunate enough to have an elderly relative who's in a care home, They probably won't be purpose-built. They won't be nice places to send your loved ones to be cared for. We've invested over the last 7-8 years about £1.5 billion into the healthcare infrastructure in the UK, building private hospitals, care homes, GP surgeries, special needs schools. And that's an asset class that kind of passes the Ronseal test. It does what it says it's going to do. And also there's a big contribution to the broader society in terms of making the UK a better place, and people really care about their health, they care about decarbonisation of the world, and they care about job creation. They're the 3 areas that we, from an investment standpoint, spend our time looking at.
Yeah, and that sort of healthcare aspect also plays into the demographic issue we have of an ageing population. And on that, Stephen, sort of looking ahead, if someone was thinking of starting a small or medium-sized company now and they really wanted to make it a business with purpose, any tips on what areas in particular might be successful, might get investment, or would you just advise people to do whatever they're passionate about, because if they are, they'll make it work?
Well, I would always say don't do something if you're not passionate about it, 'cause
Yeah.
it's probably going to fail. I think in terms of trends, I mean, just picking up on demographics and healthcare, we know we have a fundamental shift, and then you add in automation and AI and machine learning. So I think the world of work is going to change dramatically. The great thing about small companies and entrepreneurs is they are disruptive. So they will follow their instincts in different areas. So I think fundamentally invest in a growth business. But one of the things that we have always tried to do is to make this non-elitist, because there are clearly trends where people are going to work in, but there are a lot of businesses out there that do have purpose, that are doing important things in terms of sustainability in the environment, which may not be the fastest growing companies. And I think that point about trust and democratization of equity investment, it's not just for the superstars and the next unicorn. There are a lot of businesses locally across the country that are really important in their communities. They are equally part and parcel of this solution. So it's not one size fits all, it is everybody, because that's how we'll make it more inclusive.
Right, we're running over. It's hard to wrap up a discussion like this, but just before we end, any final thoughts, Michael, on sort of future trends beyond energy as well?
Well, I think we are now entering into a future state transition. You know, the old sort of paradigm of fossil fuel, of reliance on old industry, churning out pollution, being unsustainable. I think those days are well and clearly over. I think we are now seeing that because of groundswell of grassroots demand for responsible investment, you know, with the principles for responsible investment representing over $60 trillion worth of assets under management, that groundswell within the investment and financial community is making that change happen. And with things like the TCFD providing better transparency and disclosure, allowing people to see what the implications are of climate change on their investments, I think that's an optimistic path forward for society in general.
One thing we haven't touched on, though, sorry to add in another question, is diversity and how that can change the future structure of companies and what it means for investors. Do any of you have thoughts on this? And I'm happy to take a quick thought from each of you. So let's start with you.
I think it's really important. It's not just in the most obvious way of diversity, but it's diversity of thought. I think the illiterate of the 21st century will be the people who are unable to learn, unlearn, and learn again. And that's a real challenge for companies because the world is changing so fast around us. The ability to cope with change and adapt to it, entrepreneurs are normally pretty good at doing that. But people that have actually been very successful, so children that pass their A-levels with flying colours, go to university, get a fantastic degree, join an investment bank, actually have never failed at anything. So they find that very difficult to cope with when the world around them is changing really quickly. So people from lots of different backgrounds, lots of different socio-economic backgrounds, getting a real mix around the table, you make better decisions. You're much more able to adapt to what's being thrown at you around you from the world.
Stephen?
Yeah, I mean, one of the things we work with all of our companies on is putting people onto the boards of the companies. There are not enough female directors. So that's, obviously that's a big movement on public companies, but what about in private companies? One of the things that we're doing are trying to work with more women, putting them onto boards, maybe not as chairman, but as non-executive directors. So they start to get exposure and then clearly can take the sort of leadership position. So I think more women in the investment world is something that we would like to see. More women on the boards of private companies we would also like to see. And we, in our own way, are trying to progress that.
Michael, very briefly,
Quickly.
we'll then have to move off stage.
I would just say it's a younger generation that's driving this forward. In my firm and in my area, sustainable finance, it's really the millennials and the younger generation that are really making the impact. So that's where the diversity is really showing for me.
Simon, Stephen, Michael, thank you so much.